Hello. In this video, we're taking a look at investing in Eastern Europe. This video with Steve Gorelik was taken before the coronavirus hit us, but it's still up to date. And Steve gives some interesting insights in how to invest into Eastern Europe, avoiding mistakes, and what countries he likes. So enjoy the video, and if you like it, please subscribe to my channel. Hello, Steve. Nice to have you on our YouTube channel. Can you please tell us more about your background?
Thank you so much. So my name is Steve Gorelik. I am a portfolio manager at Firebird Management. And Firebird Management is probably best known for investing in Eastern Europe and to public equities. We've been doing it for a little over 25 years. We celebrated our 25th anniversary this spring. And I've been with the firm for 15 years. And probably the best thing to say is kind of to give a little bit of a history of the firm, and then I can talk a little bit about my background as well. Firebird has been around, as I mentioned, for 25 years. The first investments were in Russian voucher privatizations 25 years ago, when the whole Russian economy was valued at somewhere between $6 and $9 billion, depending on who you listen to. But clearly the opportunity was there, because you're talking about a relatively low valuation for what is 1/6 of Earth's surface and everything that comes with it. And a number of people from the different Western countries have realized that the value is there and have proceeded to find ways to buy up these vouchers that were available because people received them and they didn't really understand what they were. So my parents were those people, and I'm originally from Belarus, from Eastern Europe, and to them it was just a piece of paper that somebody is offering you real money for. So there was no understanding of what it means to own a company if you were there. But people who come from US or from Europe or from wherever, they did understand, and they understood what that was, what the value was there. So Firebird was started by 4 people who saw the opportunity, invested into Russian voucher privatizations at first, then proceeded to be one of the first investors in Kazakhstan, one of the first investors in Romania, in the Baltic countries of Latvia, Estonia, Lithuania, and have really developed a business around trying to go with when a market in Eastern Europe becomes investable from a rule of law perspective, from the economic growth perspective. We felt it was important for us to, as a firm, to learn the opportunities, get to know the people, and if it was relevant, to put some capital to work. I've been with the firm for 15 years. Before that, I was an operational strategy consultant at Deloitte. And kind of the operational strategy background is very useful to this day in terms of what I do and how I do it, because our investment approach comes from understanding how companies make money, understanding what the moat is that gives them opportunity to earn outsized return. And what's very important is how they allocate that capital, what they do in order to make sure that those returns keep on coming. And it's a core part of what we do. It's a core part of how we look at companies. My background as operational strategy consultant is very much relevant to try to understand that aspect. After Deloitte, I was at Columbia Business School for 2 years in the value investing program, and that was an absolutely phenomenal school that really taught you how to invest from the fund managers, and amazing experience. And I've been at Firebird ever since, so it's kind of simple.
You said you're not just investing in companies from Eastern Europe, but you also know a bit of the US market. So if a typical US investor would look into Eastern Europe, what easy mistakes should he avoid?
That's a great question, because when you look at the market, the first thing you see that the market is cheap. So like the Russian market multiple is, I think, around 6 times right now. If you look at the MSCI Eastern Europe, the benchmark that includes Turkey and Poland and other places, then the multiple maybe goes to 7. So it looks cheap. But unfortunately, or fortunately for us, but maybe unfortunately, if you just like looking at a way to deploy capital, the benchmarks would feature companies that may not be the best capital allocators, may not be translating the earnings into dividends, may not be allocating capital appropriately. So it's, as an active manager, competing against a benchmark in Eastern Europe, and I believe it's the case in a lot of emerging markets, where the benchmark is fairly concentrated. So a lot of state-owned companies, large companies that may not be the best companies from a point of view of what you want to invest in. So I would say that the first thing you do is, okay, the cheap multiple is a place where you start, but it's definitely not the place where you finish. And what's very important, what we found over the years, is very important to understand how the asset was created and how easy it is to make money. Because if the asset was created in a questionable way, if it was gotten in a way that may be a little weird, then it is possible that somebody will have a way to take it away from the majority shareholder. Most of the companies have majority shareholders. And you as a minority shareholder will get hurt in the process. So what we focus on quite a bit is understanding where the asset came from, how it was created, and how it's being run. Because if it's a complicated industry that is difficult to make money on, but you can make excess returns in Eastern Europe because it's kind of young, growing market, then you can feel comfortable investing behind these people. But if it's a more questionable asset, then you may see something that's trading at 2 PE, and it will trade at 2 PE forever. And it will end up being a value trap. So that's something that we find that it's very important to have local knowledge. It's part of the reason why we don't invest in other emerging markets, is because we don't have the local knowledge that it takes to, we don't have the local knowledge that we have in Eastern Europe, in places like Asia or Latin America or Africa. We just don't feel comfortable with that.
Yeah, very interesting. If we now not look at the differences between the US and Eastern Europe, maybe just look into Eastern Europe. Sure. There are many countries. What are the differences? Are there some countries which are especially interesting and some where you should be more cautious?
It's a very hard question to answer in terms of, you should be cautious no matter where you invest, right? But there's two categories of countries in Eastern Europe. So there's countries that are that've had stable leaderships for a long time for various reasons, right? But there's countries like Kazakhstan or Russia that are very much resource-based countries that depend on the wealth that comes from resources. And then you can have other sectors that develop around it, or you can have something more consumer-oriented. But at the end, you know that these are resource-oriented countries, and you should analyze them as such. Because no matter what you do in Kazakhstan, for example, it's going to be influenced by the price of oil. So that's one category of countries that's there. The other category of countries is countries like the Baltic countries like Estonia, Lithuania, or Romania, which are all EU members, which are small open economies. And the way that you would analyze the companies in these countries is the same way that you would try to analyze a company in Belgium or in France or wherever. There's certain rule of law. You can count on the courts. You can count on rule of law. We've had cases where we had to defend our rights through courts, and we're not activists, but if something is happening that is hurting our rights as minority shareholders, we can defend our rights. We defend them through courts, and the courts work. The courts work even in places like Russia and Kazakhstan, and that's something that not a lot of people realize. But if you have a clear case, the courts work. There is a rule of law. In total, there is 37 countries in Eastern Europe. We invest, I believe, in 11 of them. Other countries may have a stock market, maybe developed countries like, for example, Czech Republic, where we don't do a lot, but it has a very shallow stock market. There's just not a lot of things to do there. And the companies that are publicly listed there are trading at reasonably high valuations to the things that we can buy elsewhere. Or you can have countries like a lot of countries in Central Asia where they may not have a stock market to speak of, or may not have a rule of law to speak of. So it's too early for us to invest in a place like that. So, but from the places where we do invest, I can't say like this one is my favorite or that one is my favorite. There are great opportunities in each one of them. And because the region is so overlooked, it you can find great companies there, no matter where it is.
What are your favorite markets?
What are my favorite markets?
Or 3 favorite markets?
My 3 favorite markets. So I think in terms of what we're going to talk about today, so a country like Russia is a place which will give you great liquidity, absolutely unique world-class companies at prices that you may not believe that you can get them elsewhere. So for example, we have oil and gas companies that are trading at, I think as of today, it's like 6 to 7% dividend yields. These are world-class companies that are growing their production while generating a lot of free cash flow. If you take a look at a Western company like Exxon or Chevron, they are making a lot of money, but they have to spend all of that money to keep the production at the same level. If you take an oil company in Russia like Lukoil, they're making a lot of money. They're spending some of it, but it gives you a double-digit free cash flow yield that they pay out to you as dividends and buybacks. And in Russia, there's a number of examples of companies like that range from large cap companies like Lukoil to other companies like one of the companies that we have in our portfolio is this company called VSMPO Arisma, which is one of the key manufacturers of titanium in the world. This is a key part of the titanium supply chain for companies like Boeing and Airbus. They produce unique, they have a unique asset that comes from years and years of investment that has a world-class asset as a result. And this is a company that has relatively low liquidity. It trades below $1 million a day, has a relatively low free cash flow, but it has a dividend yield of, I think, 9 or 10%, and it's a single-digit EV to EBITDA, where any other company in that sector will be trading at EV EBITDA of 20 plus. So that's one example of the type of things that you can get in Russia that we think has really, really amazing risk reward. Another place is country of Georgia, which is a kind of a case that we've been following since 2003. We've been investors there for quite a long time, and we saw an amazing transformation in Georgia over that time period, from a place that was known to be probably the most corrupt country in former Soviet Union to now being, if I remember correctly, number 6 on the global list of ease of doing business. And it just tells you like a little bit about how far the country has come. And there's a number of listed companies. All of the companies that they have in Georgia have chosen to list in London. They're fully listed companies. The local stock exchange is not very well developed. But these are companies that we're big shareholders in Bank of Georgia, which we owned, if I remember correctly, since 2004. That is trading today at a PE of under 6 and a dividend yield of 6% while growing at 10% plus, with an ROE of 20% plus. So these are like very good numbers where we can buy this company at 5 PE, and I'm going to make 15% per year. I'm going to make 20% per year without multiple changing. And if the multiple changes, the company historically traded between 5 and 12 PE, and now I'm buying it around 5.5. So on a historical range, it's also quite interesting. So Georgia, for a number of reasons, this year is cheaper than it was for quite some time and cheaper than it should be. And we think some of those are going to be reversing over next year. So if you're going to ask me which country in our region I'm most excited about next year, it is probably Georgia. Another relatively major company within our region is Romania. So this is also a place that we've been investing in since mid-90s. And this is a country that went through a really interesting transformation in 2011, 2012, where they had a period where the people, IMF has come in to kind of help guide the country after the financial crisis. And part of the recommendations from IMF is that, okay, you guys are part of EU, but you need to really deal with the corruption problems that you have in the country. So they established an anti-corruption regulator that put people in jail that nobody ever thought would go to jail. And that to us is kind of a key part of transformation of a country from an interesting investment destination that's probably a value trap to something that can generate value over the years. In Romania, we saw that change back in 2012. We saw people go to jail, which followed by growth going from 2 to 3% per year to 4 to 5% per year, where it has been for the last few years. This is a country that has been doing really well, kind of hitting on all cylinders. And in the process, a couple of companies got listed, so the markets got deeper. They're developing local pension funds. So all of those things, good things were happening. But over the last couple of years, the people who were in power were kind of trying to take the country back, and they were trying to weaken the anti-corruption regulator, and while being populist, so kind of following the blueprint of some of the other places in Eastern Europe, like in Hungary and Poland, which have been taking the more populist approach. So they've been trying to give people, okay, we're going to raise your salaries, we're going to raise your pensions, but let's reduce the powers of this anti-corruption regulator. And the people went on the street saying, no, we don't want that. Because once you lived in a corrupt society, and then after that you lived in a free society that is relatively free of corruption, you just really don't want to go back. So people have said, okay, okay, you're trying to bribe us, but we're not going to do it. We're not going to go for it. And what happened is that, so this ruling party that was there, they had about 40% after the last elections. In the European election this year, they got 20%, so they got half of what they had before. And then after that, they realized that they lost their grip on power. The people who were supporting them in the parliament left them, so they lost it. They recently had government fall apart after that. So the elections are coming next year, but you already have different people in power, and this country is being run differently. So what you had is that you had a lot of underlying things happening with companies that were going well, but the market had its issues because of this populist government in power, and we think next year that's something that's going to clear up. So that's another country. I think that was 3. You told me naming 3, so that's 3.
Thank you very much for these insights. I'm happy to get back into more details in our next part of our interview. So happy to see you there again.
Thank you so much. This was great.